My next guest sees a real shift underway in the international markets. Instead of everything moving together in a correlated fashion, investors are coming to a point where stock picking is going to matter more than ever. Thomas Grossman is the founder of Union Avenue Advisors. Tom, good to have you with us. Thanks so much for coming in.
Thanks for having us.
Let's talk about China right now, because you've got one stock that you want to talk about, this having to do with the airline industry in China. You say there is a secular shift going on. More money in people's wallets means more money to travel, right?
You have it, yes. I think that the decoupling argument in emerging markets has sort of been won, and people understand that the real underlying attraction of emerging markets is the domestic demand, rise in living standards, and consumption. So while last year and previously stocks of exporting companies, which has been the backbone of emerging markets forever, have sort of performed in line or better, even though the reason people wanted to own these emerging markets was domestic demand, we're now seeing, I think, a little bit of that decoupling finally. And the plans to stimulate consumption in China, particularly, for instance, have highlighted the obvious stocks of groceries and consumables, but also attached to that is travel, which is obviously a very, very low part of
China Southern Airways. This is the stock that you're really focused on.
Yeah,
right?
We like China Southern Airways very, very much. It trades at a very small multiple to book. It's the estimates for the company are very conservative. For instance, analysts don't expect them to reach their peak earnings, which they reached in 2007, till 2013. That with billions and billions of dollars of stimulus coming into the pocketbooks of consumers, as you said. It also has a very interesting catalyst in that all of its costs are in U.S. dollars. So related to your earlier person on the air, if the RMB does revalue higher, which seems to be a growing consensus, then their cost basis goes down. They also have a tremendous amount of U.S. dollar denominated debt, so they'd have huge revaluation gains on any kind of RMB revaluation.
So here's a way to actually, in a sense, go long the renminbi, the Chinese currency. You buy China Southern Airways because they're going to get that pop currency strength.
Unequivocally. Huge sensitivity both on earnings and the balance sheet to any revaluation of the RMB.
All right, let me shift your attention to the other side of the world now. Tell me what's going on in the world of natural gas and Western Europe, because, all right, here's a situation. Supply, that really changes the price, and you're saying there's going to be a huge supply, glut indeed, in liquefied natural gas coming to Western Europe.
You have it. I think very long term, the supply curve of natural gas in Europe particularly is quite concerning. In addition to all the historical supplies, you've had a great increase in LNG supplies, particularly from places like Qatar, as we've talked about. So as that gasification and reliquefaction of liquefaction and regasification of gas, as that infrastructure builds, then Qatari supplies, which are very, very low cost, can reach the European shores. And in another example of how we try to connect the dots between trades, I think if you look at the ExxonMobil statement when they acquired XTO here in the U.S., you'll see that a big part of their interest was in their ability to get gas out of shale. And Exxon highlighted that they have 3 million acres of shale properties within Europe, Hungary, Poland, etc. And so I think that gives you a hint as to what Mobil thinks as well.
Okay, so you've got this whole scenario of potentially lower natural gas prices. You say Gazprom, the Russian gas and oil producer, they get hurt because natural gas contracts that they've already signed with, let's say, Germany, they're signed based on the price of oil.
Yes. They would argue that there's a take-or-pay concept to the contract and that it will stay linked to the price of oil, and to date it has. But clearly there's been increasing volume of complaints among customers, and certainly new contracts, there will be a pressure to link that to the gas price and de-link it from the oil price.
So in this case, what, you're going short Gazprom because you think the price of natural gas is going to decline?
We are, and we think that there's huge volume growth within Gazprom already priced in, and at 6-7 times our cash flow estimates, it's not particularly cheap. It's been carried up with the rest of the Russian market, but we think for very different reasons.
So do they have to renegotiate those contracts, do you think?
If they did, the stock would fall precipitously. Even if they don't, we think they'll roll off and their new contracts would be quite lower. But to any extent that they do yield or have to yield on a renegotiation on a take or pay, because you have a lot of European utilities on a take or pay basis that are taking less gas than they needed because of the slower economy and still paying, because to date you had no alternative and you certainly couldn't go without Gazprom. We think that'll be different in the future.
All right, now let's talk about sort of the global economy, but particularly, China, but the global economy. You like a Kubota tractor, right? This is the Japanese maker of tractor equipment, farm equipment, and you think this is a bet on, well, farmland, right?
We do. We think that clearly the yields in Asian agriculture are far lower than the U.S. or Europe, and that's gotten the attention of the governments, particularly China, and they're putting together larger farms and mechanizing the farming process. Kubota historically has suffered relative to its peers who are more in the metal and mining group, which has been a faster area to excel. But Kubota is a real play on agriculture globally. They do have production and a great deal of sales in China. So it is, again, a play on that consumption theme, and as well as rice farming in Thailand and Vietnam as well, which, as you know, the price of rice has gone up a great deal, and there's money to invest in those areas.
What about the fact that it's a Japanese company listed in Japan? I mean, does that give you more of a bullish story because you think the market's been sold off?
It does for us right now. I mean, we do pay attention to money flows across markets. Japan has been a very unloved market for a very long time, as you know. We do see some evidence of a greater increase in Japan and Japanese equities for the very first time. And clearly, again, back to the dollar, they're a very big beneficiary of any dollar strength against the yen.
All right. I want to thank you very much, Tom Grossman, coming in, founder, Union Avenue Advisors, giving us some insight into the world of investing overseas.